Hey guys, how's it going? It's Zany from Magoo Investing. Happy Friday. Before we get started, I kind of wanted to lay out what's going to be going on my channel for probably the next week or so. Next week, I'm going to be moving out of the house that I'm currently living in. I'm going to be moving back with my parents for a couple months, and then I'm going to be moving up to Portland starting in September. So that just means that I have a lot of things I need to get done before then, and I don't really want to focus on making videos for the next week. But don't worry, I have stuff planned. So the plan for next week is that Monday I'm going to make my video about Rich Dad Poor Dad, which is the book that I made a community post about. Wednesday I'm going to be doing my July stock portfolio video, and then Friday I'm going to be making the video talking about what I learned from my around 1 month of being a day trader. So while none of these videos are going to be recorded on the same day and I can't really talk about any of the events that are going to be happening in the next week, I wanted to know that I have stuff pre-recorded for you guys to watch next week. So in today's video, I kind of wanted to do the opposite of what I've been doing in a lot of videos recently. I usually look at stocks that are undervalued or cheap, beaten down, and kind of discuss what I think are great opportunities. In today's video, I wanted to talk about 4 stocks that are killing it so far in 2020. These are 4 of the best performing stocks on the NASDAQ index. And I went with the NASDAQ because if you've noticed, it's mainly been tech stocks that have been holding up the overall market. And so I'm not going to be talking about the best performers based off of percentage because a lot of the top performers are biotech or pharmacy stocks, and I really hate talking about those. Also, this is my channel and I get to pick what I talk about. So in today's video, I'm going to be talking about 4 stocks that have had an incredible 2020 so far, explain why they're up so much so far this year, and talk about any potential I see with them for a long-term investment. Before we get started, I have to say that I'm not a licensed financial advisor and this is not financial advice. Anything you hear in this video is just my own opinions on the stock market and you need to do your own research. Also, if you've been enjoying these videos, I'd really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. And with that being said, let's get right into it and talk about the 4 top performing stocks on the NASDAQ so far in 2020. So the first stock I wanted to talk about is Netflix, ticker symbol NFLX. Currently, Netflix is trading for around $457 and it's up 41% year to date. If we went back to March and kind of talked about companies that would have done well during a couple months long shutdown, some of the first stocks that I would have thought of as doing well would be stuff like Netflix. Streaming has gone up significantly because people are spending more time at home and they don't have as many options to go out, do things, be social, so they're stuck at home watching movies and TV shows. The last time I made a video about Netflix, I was pretty critical on them overall, and some of the main things that I don't love about Netflix is the fact that I feel like they spend too much money on their own original products. Also, now it seems like any network that has ever produced any original shows is coming out with their own streaming service because they've noticed how much money is out there in the streaming realm and they want to take advantage of that. And so as a result, a lot of these very popular shows and movies are getting pulled away from Netflix. You have most of the Disney movies getting pulled away from Disney Plus. You have Friends that I think is on HBO now. And it's putting Netflix in a weird spot where they're spending a lot of money to come up with their own content to put on their streaming service. Looking into the overall company, a lot of the articles that I've read about the company in the past couple months has been talking about the incredible increase in revenue over the past couple years. And when I put up that chart right now, it is pretty impressive to see how significantly the revenue has increased over time. But a stat that I saw, which is pretty alarming to me, is showing the increase in revenue over time, but it's also showing the increase in spending for their new content over time. And it shows that the revenue is significantly lagging behind how much money they're spending on this new content. While I couldn't find an actual number for how much money the company spent on original content in 2019, some of the estimates that I found was for around $17.5 billion. That is a lot of money. And so if you're just sitting on the sidelines, someone like myself who does not have a stake in Netflix stock, that seems fantastic to me. It gives me more options in the streaming service and it's bringing more content to the platform, which is fantastic for me overall. But as an investor, I would be potentially worried that they're spending too much money on creating new content. Another scary article that I saw talked about how much money it costs to bring in a new customer to the service. And from what I found, it was around $600 is how much it costs for Netflix and their overall expenses to bring in a new customer. And based off the numbers that I found, it takes around a little bit less than 4 years for the company to recover all the money that they spent to bring this new customer onto their platform. And that just seems really scary to me. It's seeing how much it's increased over time and how long it takes to get that money back. So in that last video where I criticized Netflix, one of the things that I really wanted to see was for them to increase their price. And at this point, with how many new streaming services are out there, I don't know how possible that is because you have so much competition and a small increase in price could be a reason that a lot of people leave the service and go to something else. It's going to be really interesting to see some of the data that comes out about the streaming wars because it's very interesting how many platforms there are out there. Some of the things I'm really interested to see is how many streaming services on average the average household has. Are they subscribing to multiple places or are they picking one of their favorite platforms and just sticking with it? At this point, Netflix has been a top performer so far in the stock market in 2020. And you also have to remember that Netflix was also the top performing stock in the 2010s. And so far they are killing it going into the 2020s. Based off of the track record that the company has and some of the increases in revenue, I understand why the stock price has gone up and why people are so bullish on it overall. But for a long-term position, I don't feel super comfortable based off of the trend that I've been seeing with their expenses and how much money it's costing them to bring in a new customer. So right now, the only thing I would be considering doing with Netflix is a shorter-term position, maybe 1 to 2 years. But for a long-term position, this isn't a company that I would feel comfortable buying and holding forever. Right now, they are the top dog when it comes to streaming, but in 5 years or so, I don't know if that's going to be the case. It's going to have to be something that we watch going forward to see if they start losing ground as all these other streaming services come out. Let me know what you think about Netflix stock, ticker symbol NFLX, in the comment section down below. All right, the top dog pretty much when it comes to top performers in the stock market so far in 2020 is Tesla, ticker symbol TSLA. Currently, Tesla is trading for $975 and it's up 133% year to date. This is a absolutely crazy stock. If you have not been paying attention to Tesla in the past year, you've been missing out because there's been a lot of crazy things. When you look at the incredible range that the company has gone through in the past 52 weeks, it is just nuts to look at it. It went from $200 and it's had 52-week highs above $1,000. Those are some incredible returns in the past year. When you look at the 1-year chart, it's crazy to see how quickly the stock has moved. It was pretty steady for around $200 for a while, then it shot up to $900 in early February, fell with the overall market, and then when it hit that bottom, it's like they got into a slingshot and just skyrocketed up when they hit highs recently of over $1,000. When I put up the 5-year chart, this is what makes me a little bit worried, just based off of the fact that things looked pretty steady for a long time, and then it just like flipped a switch one day and it was like, nope, we're going to $1,000. And so that makes me a little bit worried because it shows that the company can rapidly change in price in just a couple days. And so that makes me a little bit worried for a long-term position. But the fact that they've recovered to pre-pandemic highs and actually have gone above that is crazy to me and is a really positive about the stock and the overall momentum that's behind Tesla. Their last earnings report was a huge beat with the stock going up around 10% after hours after the news was announced. One of the main things is that they had a surprise beat for their revenue and their profitability. This is actually going to be the 3rd quarter in a row that they were profitable, which is not something that Wall Street overall kind of expected. But going back to my video where I was talking about why I was worried about the stock market, it had to do with one of the main factors being that guidance has been cut for a lot of these companies. Tesla was actually one of those stocks that exceeded expectations because the market didn't really know what to expect. And so as a result, they were expecting a loss, and Tesla was like, nope, we're profitable, and the stock shot up around 10%. One of the numbers that did kind of alarm me was the fact that their free cash flow was negative $900 million. The reason this kind of matters is because Tesla put it out as a goal for 2020 to get that into the positive range. And at this point, they're at negative 900 million. So they have a long way to go in 2020. And I don't think that's realistic anymore, but it's going to be something to watch to see if that trend can start slowly going towards zero. So what do I think about Tesla stock overall? I'm pretty torn. When you look at the chart and the incredible run up that you've seen in the past, it is very attractive. This is a stock that I've owned in the past, down at around $180, and I really regret the fact that I sold after it pushed it up to $225. But I missed that crazy run up to $1,000. And then when you look at the charts to see how quickly it got up to $900, fell, and then bounced back up and broke the $1,000 barrier, that's very bullish overall. But I do have to worry about kind of the volatility that the stock has. When I look at the overall markets, I only follow 2 people on Twitter that actually influence the way that the market moves, and that is Trump and Elon Musk, and that is a pretty scary thing. Elon has made it a habit to tweet things that makes the stock price kind of change very rapidly. One of the most recent tweets is when he tweeted out that the current Tesla stock price was too high. And when your CEO and founder is tweeting that your stock price is too high, yeah, the stock fell pretty significantly after that tweet. Also, you have the famous tweet from, I think it was 2017 or 2018, where Elon Musk came out and said that if the stock price went up to $420, he would consider taking it private. This was a tweet that I thought was hilarious, but the SEC did not think so, and there was a lot of sanctions that came out of that. But Elon Musk being the leader of this company is a positive thing and a bad thing in my mind. You have the positives that he has such an influence on the overall world, and it's incredible to see some of the connections that he's made with customers on Twitter specifically. And the fact that he responds to these customers makes it so that the average consumer has more information about what's happening with the company compared to a lot of the other automakers that don't really release these frequent tweets about what's going on. Overall, Tesla has been a fantastic story to watch over the past couple years. I remember back when they missed expectations so much that their stock fell around 20% in one day. and now we're looking at it sitting just below $1,000, and that is a crazy ride. This is not a stock I think I will own for a long-term position, but it's always something that's going to be on my watch list, and I'm going to be watching it pretty carefully because I think it's fascinating to watch to see how high the stock can go. So I know people feel very strongly about Tesla, and I'm very curious to see what you guys have to say about the stock in the comment section down below. The next stock I want to talk about is JD.com, ticker symbol JD. This is a Chinese giant that is currently trading for around $59 and is up 68% year to date. When I was looking at overall stock performance, I did want to talk about one of the Chinese stocks, but when I went into doing research for this video, I originally assumed that I'd be talking about Alibaba, ticker symbol BABA, just because I've made videos in the past talking about why I thought Alibaba was the best bet going into a pandemic. The main reason is because Alibaba is mainly the platform that things are sold on. Think about it like the eBay compared to Amazon. Alibaba is the eBay where it's the platform and it takes fees for people listing on their site, whereas JD.com is more of an Amazon type product where they're selling directly to consumers and they are the largest retailer in China. And so it turns out I was wrong. Currently Alibaba is only up 1% year to date and JD.com is up over 60%, so I was pretty wrong on that one. Recently the company announced some of their numbers that came from their 618 celebration, which is where the company was celebrating the fact that they were founded on June 18th of 1998, and they have 18 days of sales going from June 1 to June 18. And there were just some ridiculous numbers that came from that event. The main thing that stuck out to me is that transactions were up 34% compared to last year. And that's during a pandemic, which is absolutely crazy to me. I would have been pretty happy if they went slightly negative or pretty even, but 34% increase year over year is an absolutely crazy beat. One of the really interesting things about JD is the fact that Walmart, ticker symbol WMT, owns a pretty large stake in the company, and they actually own a lot of Sam's Clubs and work together in the Chinese market. So currently there are 26 Sam's Clubs in China, and all of their sales have doubled year over year. And so you're seeing a lot of crazy growth coming out of this company, which is very impressive. And then they announced some numbers talking about their groceries and kind of their day-to-day products that they sell were up over 300% year over year. And with the pandemic forcing a lot of people to work remotely, they saw increases of around 200% for the high-end laptops and around 300% for the lower-end laptops. So these numbers that they're announcing are just crazy. When you show the one-year chart, it is very stable in their growth overall, which is a lot more attractive to me than something like Tesla, which just had the rapid rise to around $1,000. When I do show the 5-year chart, you do see some chop from around 2017 to 2019, but when you've had around 1 year of steady growth during a pandemic, I feel more bullish on it overall than I do bearish. So with any Chinese stock, you do have to take into account some of the risk associated with a potential trade war that we might have between the US and China, and some of the news events, stuff like the Luckin coffee fiasco, makes it so that I told myself I was never going to be investing in smaller Chinese stocks. But when I think about Chinese stocks, I kind of think about the big three, which are Alibaba, ticker symbol BABA, JD.com, which is ticker symbol JD, and then Baidu, which is ticker symbol BIDU. I think of these as the three Chinese giants that I would feel comfortable owning, and I'm not worried about them having fraudulent numbers just based off the fact of how large they are and the fact that JD.com works with a major US company like Walmart. So overall, JD has shown some very impressive numbers so far in 2020, and I'm very curious to see what you guys have to say about the stock in the comment section down below. The next and final stock I want to talk about in this video is PayPal, ticker symbol PYPL. Currently, PayPal is trading for $170 and it's up 57% year to date. I do want to disclose that I am a shareholder of PayPal because I think it's very important for you guys to know what I'm a shareholder of so that you may notice any potential biases that I have towards the companies that I have a financial stake in. So PayPal was a stock that I talked about pretty recently in my video where I was talking about stocks to buy if the stock market crashes again. At this point, the stock market has had a couple significant red days in a row, and as of right now, the stock market is down around 1.5% today so far on Friday. So while we're definitely not having a crash like what we saw in March, the stock market is slowly sliding, so it's going to be something I'm going to watch going forward. So when I look at reasons to own PayPal, this was one of the charts that stuck out to me as being incredible to look at, and this was their increase in their payment volume over time. And you can just see the steady increase over every quarter going up until this last quarter where there was a slight dip overall. Currently, PayPal has around $200 billion of cash transferred every quarter, and that's been that way for the past 2 quarters. So PayPal is the leader in digital transactions, and it's something that I use almost every day. I pay my bills, I pay my friends, and recently I started paying for my Uber Eats stuff through PayPal. From their last earnings report, PayPal saw an increase of around 7.4 million new users, and they had a 17% increase in their revenue. So as I mentioned, PayPal is perfectly poised to take advantage of the pandemic and the switch towards digital transactions being kind of the easy way to go right now. Also, they had 1.2 billion transactions, which is a 20% increase year over year. 1.2 billion. That's just a ridiculous number to think about how many transactions are going through their network at any given time. Also, payments on their little brother company, Venmo, was up 48%, which is another crazy number. So when I look at PayPal, I see a leader in a sector that I assume will only increase in size over time. During the pandemic, we've seen that companies can survive based off of digital transactions, and PayPal, being the leader in that sector, seems poised to take advantage of that going forward. While the stock is up significantly so far this year, I don't think this is the last kind of hurrah that we see with the company. I'm hoping that if the market falls overall, I'm hoping to double my position in PayPal and ride this on for the next couple years. One of the really interesting things going forward is the fact that there's been some rumors talking about PayPal and Venmo want to integrate Bitcoin transactions into their platform. And while you may not be a huge fan of Bitcoin, this will significantly increase the volume of transactions and the money transferred over time. While this is all rumors and PayPal is kind of looking to integrate Bitcoin before any of these other platforms, it makes me feel really good about the company for the long-term position. Overall, PayPal was one of the first companies I bought on the stock market, and it's something that I intend to hold for years to come. Let me know what you think about PayPal stock, ticker symbol PYPL, in the comment section down below. So there it is. Those were my 4 top stocks, or the top performers so far in 2020. We talked about Netflix, which is one of those stocks that you kind of assumed was going to be doing really well. I also talked about Tesla, which has been the darling of the stock market overall, being up over 130% year to date. Then I talked about JD.com, which is the Chinese giant that I kind of expected to do pretty well, but not as well as something like Alibaba. And then finally, I finished up the video with my personal favorite, which is PayPal, ticker symbol PYPL. These are 4 stocks that I love for various reasons. Some of them are slightly more risky, specifically Tesla with how rapidly the price has increased over time. And then you have some very stable companies in the past couple years, stuff like JD and PayPal overall. And I'm very curious to see what you guys have to say about these 4 stocks in the comment section down below. Thanks for watching these videos. Stay inside, and I'll see you on Monday.